Welcome to The Explainer. Today, we're pulling back the curtain on the hidden journey that powers all of global finance. It's a process that starts with just a single click, but ends up moving trillions of dollars securely all around the world.
I mean, think about it. You see a share pop up in your account, the money leaves. It seems so simple, right? But behind that really seamless experience is an incredibly complex, high-stakes relay race happening at basically the speed of light.
That one action, it kicks off this whole multi-stage process. We're talking dozens of systems, multiple organizations, all having to work in perfect sync to make your trade official.
And that process has a name, the Trade Lifecycle. You can think of it as the operational backbone of the entire financial world. It's designed to guarantee that every single transaction is executed, confirmed, and settled, not just correctly, but safely. So let's break this journey down. The best way to think about it is like a three-stage relay race. First up, you have the explosive sprint of execution in what's called the front office. Next, there's a crucial validation checkpoint, that's clearing in the middle office. And finally, you've got the trade crossing the finish line with settlement in the back office.
All right, our journey begins in the front office. Now, this is the fast-paced world of traders and algorithms, where decisions are made in microseconds, and literally every single millisecond counts. This table really maps out that initial spark. First, you've got execution. The second a trader hits buy, an order management system makes it happen. Then, bam, instantly you see trade capture, where a system records every last detail. And finally, a quick validation check makes sure the trade is even possible before it moves on. And get this, all of that happens in the blink of an eye. So the trade's been executed, but we're far from done. It now enters the middle office, and this is really the unsung hero of the life cycle. Its job is to validate everything and protect everyone involved from risk.
Now, the guiding principle here is something called straight-through processing, or STP. The whole goal is total automation. You want the data to flow from system to system without a human ever touching it or retyping it. And this is absolutely crucial for cutting down on costly mistakes.
This slide shows you just how meticulous the middle office is. After the trade is enriched with details and confirmed with the other party, something pretty amazing happens. It gets sent to a central counterparty, or a CCP. The CCP literally steps into the middle of the trade. It becomes the buyer to every seller and the seller to every buyer. And what this does is it completely eliminates the risk of the person on the other side of your trade ever defaulting. It's a huge deal.
Okay, with the trade confirmed and guaranteed, it's time for the final leg of the journey. We are now in the back office. This is where the actual irreversible exchange of assets and cash finally takes place. This is where we make it official.
And there's a crucial principle here called delivery versus payment, or DVP. You can just think of it as the ultimate safety net. The system guarantees that the shares are only handed over at the exact same moment that the cash is received. It completely eliminates that risk of, paying for something and getting nothing back.
This final table shows us the methodical conclusion. An instruction is sent to a central securities depository. You can think of it kind of like a bank, but for stocks. Then on the settlement date, which is usually 2 days after the trade, or T+2 as they call it, the final exchange happens. The trade is booked, and a final reconciliation check is run to make sure every single record matches up perfectly, hunting for any discrepancies, which are known in the industry as breaks.
Okay, so we've followed the journey of just one single trade. But why go through all this trouble? Let's zoom out for a second and see why this meticulous life cycle is just absolutely essential for the stability of the entire global financial system. At its heart, the entire process is a really sophisticated risk management machine. STP fights operational risk by cutting down on human error. The CCP completely eliminates counterparty risk by acting as a universal guarantor. And it tackles a third, absolutely massive risk, liquidity risk. Yeah, this is one of the most powerful things the middle office does. See, instead of every bank having to pay every other bank for every single trade they did all day, the CCP calculates who really owes what at the end of the day. And this process is called netting.
So just imagine a day where banks trade a staggering $100 billion worth of securities back and forth. If every single one of those trades had to be settled individually, an absolutely immense amount of cash would need to be on hand. But after the CCP nets everything out, it might find that only $5 billion of actual cash needs to change hands to make everyone whole. That is a 95% reduction in the required cash flow.
It frees up enormous amounts of capital and makes the entire system drastically more efficient and stable. That, right there, is the magic of netting. As our source material puts it so brilliantly, this life cycle isn't just some background process. It is the very architecture of a financial firm. Getting this journey right, making it fast, automated, resilient, that's what separates the leaders from the laggards.
So the next time you click buy, you'll know the incredible hidden journey that follows. But it does leave us with a question for the future, right? With technologies like blockchain and AI on the horizon, how might this vital life cycle evolve next to become even more instantaneous and even more secure?